All right, welcome back. I hope you're having an awesome time so far. Our next panel is titled Facing New Competition, Neobanks, Challengers, and How to Compete. Please join me in welcoming our panelists to the virtual stage.
Thanks, Patricia. Good day, everyone. Really excited to have you join us today for this panel. I think we're going to have a great conversation. I'm looking forward to engaging on this topic. I'm Tim Mills, Senior Vice President of Emerging Payments at Regions Bank, and I'm joined today by Justin, Brian, and Melissa, and I'll have them introduce themselves. Justin, you want to start?
Yeah, that'd be great. Thanks, Tim, and really appreciate everyone having us here. My name is Justin Cohen. I'm the Vice President of Banking at Avant. I've been in the fintech space and high growth startup space for over 15 years, leading product, operation, technology through the growth phases. And I'm excited to talk a little bit more about the future of Avant and how we're looking at banking becoming part of our platform as we continue to extend credit and opportunity for the underserved community.
Excellent. Brian.
Yeah, hi. Thank you for having me here. I'm Brian Kale, the Director of Customer Success at Novo. And we're a small business banking platform that's trying to provide checking and debit accounts to modern business owners here in the United States. I'm sure you're all aware that the economy changed over the last 10 years. There's a lot of new types of small businesses, and they need to be banked in ways that match their consumer banking experience. So Novo is trying to build that for them to match their expectations. And I'm sure we'll dive into that a lot throughout this conversation.
I'm sure we will as well, Brian. Melissa.
Hello, thank you so much, Tim. It's great to be here. So I'm Melissa Gonzalez, the Senior Vice President for Financial Centers, ATMs, and Market Strategy for Bank of America. My role at the bank is really to think about and consider our current strategy, how we push forward in this digital age, how we keep our clients happy, healthy, moving forward, staying ahead of the curve, making certain that we are really meeting our clients where they are. So I'm really looking forward to this conversation today as we jump in, Tim.
Thanks. Well, this should be a very interesting conversation. We're really talking about new competition, and I would say break it down even more basically and say the changing landscape of financial services here in the US. And I think this is a great panel because we have a nice diversified representation of players in the financial services ecosystem, from neobank to fintech to large FI, regional FI. I think that this should be a multi-dimensional conversation, if nothing else. So let's jump right into it. Our first question really deals with a primary challenge that I think, regardless of what role you play in financial services today, that we're all really facing, and that is, how do we really deal with this changing landscape? Challenges by a lot of new entrants that are entering the marketplace that perhaps we haven't seen in the past, or even players that we've seen in the past that have kind of remade themselves. And Brian, I'm going to toss it your way and get your thoughts on this.
Definitely. I think the first thing that the industry as a whole, both traditional establishments and new fintechs and startups, need to ask themselves is, why are consumers changing their needs? Why are consumers going to these new offerings as opposed to the traditional banks and the traditional offerings? And I think it just speaks to the changing mindset of the marketplace. I know that I'm business focused and there's consumer focus here, so I'll try to not overly lap it with business, but the reality is small businesses, many of them in the United States, are consumers now. After the '08 recession, the Internet of Tools took off, enabling one person to use a laptop to form a business. And that same person was served amazing consumer grade experiences. And there's been a lot of innovation on the consumer side, even with the traditional banking. But what you're seeing over the last 10, 15 years now is consumers have a ton of choice, and they're not putting up with friction. They're not putting up with slowness, lack of transparency. And even outside of banking, you're seeing it everywhere. Consumers want speed, ease of access, and accessibility, which is, repeating myself, but the reality is that everyone is being compared to Amazon, including banks. And I think that's where the opportunity is for startups, neobanks, and existing banks to kind of come together to ask, why is this happening and how can we meet these demands? Which could be a whole conversation in itself. So we don't want to dive too much into that right now.
Yeah, really interesting. I agree with you 100%, Brian. I mean, I think that, you know, when we think about here at Regions, our priority, we found being very focused on connecting to our customers and realizing that what we hear is that they do want speed. You know, from a payments perspective, they want to be able to transact in the same way that they live their lives, which is in real time. So they're looking for that speed. They definitely want that transparency. Nobody likes the idea of a transaction taking place and not having an idea of when it's going to complete or where the funds are going to end up. And then, of course, that convenience piece plays into this as well. I mean, life goes on 24 hours a day, 7 days a week. The idea of traditional banking, you know, Monday through Friday. And I don't want to belie my age, but I can still remember when you had to get to a bank by the middle of the day on Wednesday because Wednesday afternoons, the branches closed. So Melissa, your thoughts from a B of A perspective?
I will agree with you, and I will not give my age either, but I was there. I remember those days. So, you know, it's not enough for us to consider the financial service industry as our competition. Your competition is everywhere. Your client is feeling a service level agreement in all industries. And our job is really to understand what that service level agreement is and exceed it. And so we happen to be in the financial services industry where we are focused on innovation and making certain that our clients are growing and are financially prospering. But it's not enough for us to say we're just going to provide quality products, because quality products are across the industry. This is really about understanding your client and making certain that your innovation is ahead of the curve, but not too far ahead that your client can't keep up, right? That we have to do all of our decisions with the focus of the customer centric first. And then you can go on to innovate and make decisions on e-commerce, on ATMs, on your market growth, where you will establish your businesses, what makes sense from an investment standpoint. But it's not until you get to the point that you understand that the client is going to dictate how you progress and how you push forward, that then you will start to see some monumental success.
Yeah, interesting. Justin, you agree with that perspective?
It's a great perspective. Customer centric is critical for long-term growth and continued expansion across all financial services companies and technology. Recently, you know, COVID developed the great accelerator to the digital space. Obviously, a lot of these technologies and services have been around and growing, you know, ever since it's PayPal and a long time ago, right? And BankX that was established. But at Avant, that was one of the accelerators that moved us into our space back in 2012, was obviously the restriction and access of capital and opportunity for consumers as larger FIs pulled out of providing credit after the Great Recession in 2008. And so I think there's continual opportunity for new entrants to come in and continue to evolve this space and provide the digital transaction and transformation that ultimately provides the level of service that consumers are looking for. Simple things like a 2-day early direct deposit really helps advance the space, and now everyone's trying to catch up with that. So I think new entrants continues to provide and raise everyone's game. Iron sharpens iron, and I think it's a great thing to see collaboration occur and investments occur across the space, because consumers are constantly evolving and growing and wanting things more transparent, faster, and also fee simple in order to kind of advance them in their days.
Interesting. I love that. Iron sharpens iron. I might have to use that in the future. So, I mean, I think we've all talked about some interesting tips for really kind of prioritizing how we can best serve our customers in a way that keeps us connected to them as we see new entrants come into the ecosystem. Let's talk about, what are the strategies, maybe organizationally, that each of you, and I'll share some of the strategies that we look at here at Regions, that you're using as a way to meet some of those tactics that you talked about. Are you looking at partnerships? Are you really focused on building from within? Are you looking at an amalgamation of the two? Justin, your thoughts on how you guys at Avant are maybe taking this approach?
Definitely. So at Avant, we definitely always look to build our core capabilities in-house. I think it provides a lot of flexibility and autonomy to continue to innovate, to provide that best quality service to our customers. But we know that there's certain areas that there's experts in, and there's components that really will provide the enterprise level service for our consumers. So we're consistently looking to develop our in-house core platform that provides credit, loans, now eventually banking platform, et cetera. But being able to provide a consistent experience to our consumers through established platforms and players in the space as well. So we'll look to continue that integration and collaboration so our customers have the best in class experience, and continuing to round that off with great access to our customer contact centers, as well as other platform initiatives that will continue to allow our customers to bank with us, or receive credit with us as well.
Interesting. I think I would be one of the first to say that, from a financial institution or depository institution perspective, it's really difficult for us to sometimes pivot in order to meet some of the changes, and especially the seismic changes that we're seeing in the industry here over the last decade or so. I talked about speed and transparency and convenience. I think what we've discovered within our own organization is that building exclusively from within doesn't always provide us with the agility and the speed to market and the responsiveness that our customers need. And so what we found is really taking kind of a hybrid approach, where we're really looking at areas where we can partner with fintech providers as a way to accelerate a lot of that work to support our customers with speed and convenience and transparency. And then on the other end of the spectrum, realizing that there's going to be some building internally that we're going to do, because we really feel as though we have the resources and we're in the best position to be able to support that kind of delivery to our customers. And Brian, I know, as a fintech platform provider, that you guys are probably well entrenched in the build it approach, but I'd love to hear a little bit more about how you guys see this.
I mean, we're a tech company, frankly, that happens to have checking and debit accounts through a banking partnership. We are very bullish on partnerships. And I personally am bullish on the concept of the decoupling of the banking industry. You're seeing it outside of banking and finance. Consumers are decoupling all the services and products they use. They're going for more targeted niche products that do the job amazingly well, rather than these holistic closed loop systems. And traditional banks often are closed loop systems. They don't like to play well with other systems. They don't want their data or the money, frankly, to move off those systems. And consumers, as you just noted, rightfully reject that outside of banking and inside of banking. And so what you were going to see is through Plaid, through Stripe, like all of these, let's just call them, these emergent financial products that have emerged over the last 15 years, they all have one thing in common: open data access, and they talk to each other, and they talk very well to each other. But then you look at traditional banks, like they only just now signed a deal with Plaid to kind of break down some of the gaps. And I'm not going to call anyone out, but like consumers have been complaining about that for the longest time. And so what's going to happen is you're going to see people turning to niche specific products that offer better services. Like Prosper offers great loans at lower reduced rates faster. And consumers are going to want rapid resolutions, rapid on demand. I don't want to say instant gratification, but that kind of sense is, before the only way to talk to your financial institution was to either go in or call. And what we're seeing with the digitalization of literally everything is consumers now feel it an inconvenience to even talk to any brand, let alone their bank. And so I would say banks need to pay attention to that, because the over reliance of phone calls that banks traditionally have, the salaries globally are going up. So those costs of phone calls are going up dramatically. And at the same time, bank branches are shutting down. And the mobile apps for many banks are not where they need to be to support customer empowerment. And by this, it's like customers should have full access and empowerment of their data, their money. They want instant payments, the 3-day, check hold, same day. That doesn't fly with consumers anymore. They don't literally understand it. And I think it's about, how do we create a connected ecosystem that shares information between multiple different systems and platforms to then provide like curated experiences based off of that knowledge share. So like, one bank could be like, well, we are very good at this product, and this data that you have, we know all about you. We can recommend you this product from this company that we've partnered with. And it's about coming together and understanding that. And so the traditional banks will probably be forced to partner and be forced to open their moats a little bit, to allow ease of access, simply because consumers demand it. And it was brought up a second ago with Justin. It's like, life finds a way. Consumers find a way. If they're underbanked, they will just circumvent. The amount of people who use Venmo, Cash App, and PayPal as their primary bank accounts in the United States is staggering. And banks should pay attention to that. How did they let that happen? How come they didn't bank those people in the first place? So again, it's another, how did we get here and why is it here? And then from that, you can answer it, which is also another huge topic that I'm sure we could spend all day talking about. But yeah.
Brian, tell us how you really feel.
It's not that bad, but I do think, like, I'm from a SaaS background in consumer side, and everything I'm seeing is consumer demands have rapidly evolved. Like they want 5-minute answers and 5-minute resolutions. And if they can't get it, then they'll contact you, and then they'll contact you until they get it. And so it's just something that I think all of us, specifically banks, really need to pay attention to.
Yeah, no, I think you bring up a great point. I think that there's a balance though, right? So let's go back and talk about customer data sharing, for example. And so, we've seen over the last 15 years or so a proliferation of fintech apps utilizing screen scraping that allow for a consumer to essentially provide their banking credentials or credentials for other financial services they may have access to in order to get the ability to get aggregated data services. And I get it, there's a need there, but I think the other side of that is, remember that in a lot of cases, a lot of the fintechs that we're referring to are not necessarily under any sort of supervision from a regulatory standpoint. So what happens when you have the massive data breach and everybody says, it's not my fault, and meanwhile, the impact is to the consumer? And Melissa, I don't know if you have those conversations at BofA, but I know we have them within regions.
For sure. I mean, listen, I spent 6 years on the operations side of the business before joining strategy. And I'll tell you that is a very real concern. From a strategy perspective, Brian, to your point, customers do want instant gratification, and they are looking for that 5-minute conversation. That does not mean that that's what they need. And so it's our job to really make certain that, yes, we hear them out, that we give them concise information that's relevant for their issues, but that we also take the opportunity to inform and to educate and to make certain that the client has the kind of communication that is necessary, not just asked for. If it were up to myself, I also would be having those quick 30-second, give me the quick and dirty, I need to keep moving, right? But at the end of the day, I may need to take a step back and go, okay, I hadn't considered X. And that's our job. Our role here is really to understand and make the client understand so that they can make informed decisions. But I'll go back to the strategy of growth for a moment, because from a traditional bank perspective, we are growing our teams and growing our business and doing it organically. But I will take us back 10 years ago when that was not the case, right? We were looking for every merger possible. We were looking for every client, every institution, every fintech partner we could find, until we got to the point where we did some self-analysis and understood that we don't need to grow that way. We have the clients, we have the share of wallet. We're in a position really where we need to understand the clients that we have today, the asset opportunities, the off us opportunities. Brian, again, back to your point, right, of how many clients there are really using Venmo and Cash Apps, and how we reach those clients. And then once we have them, what do we do with them? Are we providing financial literacy? Are we helping them to get to a place where they understand the benefit of being with our institution, right? Otherwise, we could try and attract and add and market to those people all day. But it's not until they see the value really of what you can provide to them that they will grow with you.
Interesting. Hey, Justin, you want to get in on this? I think you are chomping at the bit over there.
I realized I talked a little bit on part of the question and not on some of the growth strategies as well, but and just kind of echo a bit of what Brian and Melissa were saying. I think that both sides have a lot of truth, and a lot of value. I think that's a bit about how we're approaching it on the side from Avant, in terms of being able to develop great credit products for consumers that are typically underserved or kind of left behind, and providing access, which does help build credit, and then ultimately build your ability to get more over time, and eventually grow and nurture within the business. And so I think that, to Brian's discussion on there's a lot of niche products that are occurring in this market today. And I think that's because everyone's trying to carve out a little bit of the market share here and a little bit of the market share there. I think consolidation eventually comes back to play when you kind of lack a lot of those other standard offerings that you would look for. And so if I'm at FI or a neobank now and I only have checking or saving, what about credit? What about loan? What about mortgage? What about all these other stuff? And I have to cobble it all together, and it becomes a complex journey in order to do that. And so that's the approach that we're really taking at Avant, is being able to provide that standard core offering across the product spectrum. And we obviously were able to build great credit products internally, and do the lending and build the credit for a consumer group that's typically lacking access. And we recently acquired Zero Financial and Level, which was their neobank. And we're currently integrating that into the experience to provide that their relationship anchoring product and allow it to graduate more access, more opportunity. And doing what Melissa said, education and financial health is so important for our consumer group, because we want to continue to allow them to grow, rather than maybe get stuck in a cycle, or just get fee harvested, which tends to occur. And I think that's a really important area that I think banks and institutions really need to continue to dig into, is how not to compound the lack of access or lack of benefits for that consumer group. Because once you get stuck in that cycle, it's impossible to get out of. And we've seen that with surveys with our consumers of, the majority of them do not believe they'll have enough money, to save from a retirement perspective. But then they don't have the ability to invest because they don't have the amount of money or the capabilities to do so. So how do we help that? And how do we grow that consumer through? And I think that's a really interesting area that, we really are investing in, and I see others are starting to as well. And I think that's an area that is ripe for change as well.
Yeah, that you bring up a great point, Justin, when you begin to talk about accessibility. And depending on who you speak with, there's an argument to be made that because of things like omni-channel experience, we have greater accessibility, or offer greater accessibility as an industry now than we ever have. And then there's also a perspective that says, and I think that's kind of what you were touching on, Justin, that we still have a way to go when it comes to accessibility. Brian, any thoughts along those lines?
Yeah, I mean, I agree with everyone here, right? Like, it is up to the industry, both non-players and big players, to protect people's data. I mean, there have been some major breaches in the industry, which is why I think a lot of fintechs have been elevated is because of those breaches, a breach of trust with the consumer and the market. And there will frankly be more, and probably from neobanks as well. And we should be prepared. And I think the next 10 years, everyone really needs to pay attention to data security, fraud management, and protecting consumers from malicious actors. As we all know, there is a lot of weird stuff going on the internet right now. And to Justin's point, most people, especially in the United States, who are in the lower to underbanked range, just need help. They just need advice. They need someone to be a partner to them and not talk down. They don't want to feel like they are a number on a spreadsheet or just here to be a revenue generation. And be it through guided experiences or less aggressive sales tactics, or just frankly having conversations, right? Like Melissa's absolutely right. Like we should, like when I meant 5-minute resolutions, I meant like going to an app, finding what they need in 5 minutes, not getting pushed out of the customer support conversation. Like those people want quick experiences, but when they do finally decide to talk to you, you want to make sure that you have value driven conversations that are meaningful and legacy, like impact your brand as a legacy part of their journey, specifically in the business space, but consumers as well. You know, people don't know the rules, and we're having this decade of transparency come in, and I think it's gonna be really healthy for everyone involved. So
Yeah.
doubling down on everything.
You know, so it's about accessibility, but I think it's also about the quality of that accessibility. And I know, Melissa, at B of A, as well as at Regions, you know, we spend quite a bit of time thinking about omni-channel and how to provide an experience that really has value for our customers. You know, maybe you can talk a little bit about how you guys view quality of accessibility in terms of being an attribute that you know you target.
Oh, it's so important, Tim. So think about our mobile platform, and I'm sure Regions has one as well. When we started to make the investment in e-commerce, we very quickly, without trying, understood where the client was, right? They told us in spades. The mobile adoption was incredible, right? It exploded across the industry. So we learned very quickly Brian's earlier point about, you know, access and wanting to be able to have that quick hit. What we have learned, though, is in terms of quality, we have millions of users on our applications. Award-winning application, does a phenomenal job. We hear accolades all the time. But what we also hear is that clients want to shop online and buy in person. They want to be able to have a conversation that cannot be manifested through AI today. Today, I say that as a caveat, right? Because we all understand where AI is headed. But today, our clients really need to be able to have the give and take that comes from fostering a conversation with a human being. And so while we are seeing the purchase online or the acquisition online, the widget, the depth of the relationship and the assets that come with that are happening in person.
Yeah, no, I think you've got that 100% right. It's kind of interesting that, you know, mobile used to be a differentiator. And if nothing else, COVID really hammered home the fact that it's now a necessity. It's an expected part of that experience. And I know that at Regions, we actually prioritized work around the digital experience over the past year or so because of the importance in the high level of adoption and enrollment that we saw as a result of COVID. But I think it really bears out this idea of prioritization, especially within financial institutions. But I think all organizations always run into this issue of, you know, how do you decide what are you going to do first, what do you do second, and what do you do last? That being said, that really brings me to the next question in our conversation, and that is partnerships. So how do your organizations view partnerships? How should the industry view partnerships? I think, before the session, we were having an informal conversation. I shared with the group that, there was a time when banks viewed fintechs, as a four-letter word. And I think quite as it's kept, I think fintechs viewed banks as a four-letter word. And I think what we realized is that it's a symbiotic relationship. Fintechs need the FIs, and the FIs at the end of the day need the fintechs, partially because FIs, and I'm speaking from a payments context, provide a lot of accessibility to those payment or those money movement networks that the fintechs really need in order to drive value in their offerings. But at the same time, those fintechs are able to innovate much quicker. Some would even argue more efficiently than maybe large FIs. And Justin, I'm sure that Avant, you mentioned that you guys do a lot of the internal building yourselves. I'm sure that you guys have experienced, kind of that argument of, do we engage in a partnership? Do we not engage in a partnership?
Oh, yeah, definitely. Yeah, partnerships and collaboration are at the ethos of Avant, and it's come from a lot of different areas and places. And so we have banking partners that help us originate our credit and lending products. We have our banking partner that helps hold our assets as well on the banking side. Both WebBank and Evolve, are great partners of ours, and that's just one place from a collaboration standpoint to help create this digitization in the movement to allow consumers to access the products how they want to access it. But we also overlay that with a great operational center. We have representatives around the world. They're helping to take calls and work with our customers and et cetera. And on top of that, we actually created a spinoff of our company, which is now Amount, which just had an awesome funding round announced at over $1 billion valuation that helps power digital experiences for banks. I know Regions was one of the original partners that's powered by Avant, and we have a great experience and history together. And I think those create innovation within the marketplace and continue to help it evolve over time. So we're continually looking at those opportunities and those areas to continue to advance the market and help acceleration for banks in that space too. So we come at it from both sides. Avant being a B2C, and our sister company we helped spin out in 2020, Amount, and they're doing awesome as well and driving that collaboration. So yeah, it's something that we continuously look at and love from how people work together in this space.
Yeah, and Melissa, I know B of A, you guys have a number of fintech partnerships that are in play. How do you guys leverage those? What's the value proposition?
Partnership is so critical. It really is it's fundamental. It's at the core of how we do business. I can't even imagine. I'm thinking about our Erica platform that I'm sure you all have heard of, that helped us to take our mortgage process as an example. That was the traditional 355,000 page process, to bring that down to 10 pages on an app. And I can't imagine, we've seen such monumental success in that space. I can't imagine trying to accomplish that without the space of fintech. It has just been monumental to everything that we do, and it doesn't end there. Guys, we believe at our heart of hearts in partnership and collaboration. A bank our size, we bank banks, right? So the institutional relationships that we have help us to foster our business today. There is no way for us to continue to progress in the manner that we are today and have the stronghold of our position without those partnerships. And so we see it more as a collaboration of our business rather than a competition. Frankly, we feel like the more that we integrate, the more that we share our information, and the better off we'll be. And frankly, we are working towards the education for the client. Because if you think back, Tim, even the third party sharing was the four-letter word, right? We don't share my information, don't sell my information. right? Don't do it. And so we had to get to the client. First, we had to stop the abuse that was happening with that information. But once you get there, we also had to help the client understand how important it is to share that information and how that can help the client to continue to grow and take advantage of those mutual relationships. So yes, absolutely, that's how we push forward.
Yeah, it's interesting you mentioned that. I mean, one of the things that we've discovered at Regions is the need, and I think, Justin, this probably will resonate with you because of the population that you guys work with, but we found that in many cases, you have consumers that have thin credit files. They may be great credit risks, but because they don't have the traditional trade accounts, you're not able to qualify them for products and services that would benefit them. And to be quite frank about it, also benefit what we do at Regions. And so, we've partnered with fintechs like Finicity, for example, as a way to tap into alternative data that's available that can help to inform the underwriting process, which gives them access to those products and services. And Brian, I'm sure, I mean, you guys are probably very much targeted on partnerships because that's really at the core of what you're doing.
Yeah, definitely. Novo was very fortunate to have partnered with a regional community bank, and we see that as a huge value add. Like, we have two types of customers. We have the actual businesses we bank with, and then other banks. We all know that community banks are suffering. 50% have gone out have gone out of business in the last 10 years. It's very unfortunate. And these are the banks that used to support most of the small businesses in the United States and most of the consumers in the United States. They're getting bullied out of the market by all of us on this call because they're not able to innovate fast enough. They're not able to develop mobile apps. They're not able to update their policies and experiences. And so partnering with them is great. And then partnering with other tech companies, as both Melissa and you have pointed out, Tim, is the way you prevent scrapers from, maliciously entering your accounts. I'm not going to call anyone out, but Novo is definitely opposed to that type of practice. We would rather just partner, have a great connection, and provide a better experience to the customer, because customers often don't know about those scrapes. And that is, to me, is slightly unethical. And again, we're all in this ecosystem together. We're playing with the same customers. We all know many consumers have multiple accounts with multiple different institutions. How do we ensure that we all play nice together so we can have a better experience for them? And again, it's like, yeah, so we have this direct connection with this lending product, and that can make it easier for the customer because now they don't have to go through a crazy KYC process because we already did it for them. And then boom, this loan is that. And I think that that's kind of what we all need to do is, how do we take people who are on the margins, like you just said, incorporate them into the fold? Like, maybe we need to update our models of what a credit profile should look like, and then help people develop early and often these portfolios to make sure that they're integrated in the ecosystem, and while also pushing out the synthetic people that we all know exist online, because they don't really exist.
Right.
And it's like the forefront of banking is cutting through the fat to find real people who really need help and offer them the products and services they want at an a la carte means, because that's also what they want.
Yeah.
Yeah. So Nova's dedicated to that.
Yeah, I think that the headline that often gets missed is the role that APIs are playing in the ecosystem, the data sharing that's occurring, because I think what it's done is it's really highlighted the fact that there aren't the silos that we used to be comfortable with, right? So my customer is my customer, your customer is your customer, and the two shall never meet. And I think what we are finding, and Brian, you just mentioned it, in the ecosystem, is that there's a lot of crossover. And in many cases, the things we're doing may not be as competitive as much as they're a complement to one another. And so how do we make sure that we're doing, at the end of the day, what's in the best interest of the customer? Which brings me to our last question of the discussion, which is really, as we think about customer relationships, How do we, maintain our position as the primary owner of the customer? And does that still exist, or is that kind of an old school way of thinking about the customer and about the relationship? Melissa?
Sorry, I was trying to get you off mute. So yeah, the thinking is definitely old school, but there is something to that, right? So I'll speak from both sides of my face here for a moment, because do you want to be at the core of the customer? Of course you do, but it's also important that you understand that whatever you can offer the client is to enhance the client's relationship with you. So again, I go back to this notion of competition versus collaboration. So yes, do you want the largest share of wallet? It is incumbent upon you to provide what that client needs to get their share of wallet. End of story, right? I mean, are they going to look to other institutions? Sure, they will, if you are not providing what that client needs today and what they may need in the future, because they give you half the sentence today. It's up to you to start thinking about what does their future look like. And as long as you can stay with that client ahead of the curve, as I mentioned at the beginning of our dialogue today, think about those fintech companies, your partners, as collaborators, then I think that you will have a stronghold on your client. They will be in it with you because they feel as though you are there to push them forward. And that's the end game, right? Is, can I be successful with this institution?
Yeah, and again, I mean, I think it really does come down to value. If you are adding value, that relationship will exist. And I heard someone speak not too long ago, and they mentioned that every time that you provide a good customer experience, what you really done is reset the bar, because what every customer wants is for that experience that they've had to either be matched, and to be quite frank about it, really want it to be better the next time that they engage. And I think that has a big part of how you not necessarily fight for an exclusive relationship with that customer, but at least having a place where that customer perceives the value you provide is such that it's something that they want and that they need. Justin, how do you guys think about that at Avant?
Yeah, I think this is, it's the last question, and it's a great culmination question because of everything that we talked about clearly. And I think it goes into the fact that the area that we've always operated in on are consumers that have, near prime to subprime scoring. FICO is not a great number for these consumers that are 650 and below. And it's really hard for others to be able to provide credit, access, and opportunity for those consumers, especially as you mentioned on the thin file side. So I think when you look at what Finicity or other businesses are doing to provide access to information, and I think we recently are getting utilities unlocked, areas that are just like bill payment histories and information that helps you understand more about your customer in less than just a one number perspective is really important. And I think using that information to create experiences and opportunity that goes just beyond the singular FICO score, or however a traditional institution may be looking at the consumer, will create that relationship. Because if for the first time you raise your hand and say, I'm willing or able to provide you access, and start your journey, and then you create that really well tied in experience, because there's satisfaction right out of the gate. And then how do you continue to provide that high level of experience through their journey, help nurture, build, and graduate all throughout the ecosystem, especially from an Avant perspective. So if it's building that product internally, if it's partnering with someone to deliver that experience, ultimately will help enable that consumer to live within your platform. Obviously, they're going to constantly be looking for other solutions that may be different or offer different areas, but we'll look to continue to provide rewards. We'll look to continue to provide new solutions and expand our ability to provide more credit. And that's something we did on our credit card product, where it's grown over 180% over the past 2 years. And it's because we're continuing to open the box further and further in terms of more access to more consumers. And we report back to all bureaus, right? So you could build your credit as you repay with us to then move into better quality products, through and through. So I think that's really important when you look at what a consumer is looking for, and how you path them through the journey that ultimately betters their life and betters their day-to-day, honestly.
Yeah, it's that value piece. Brian?
Yeah, I mean, definitely agree with Justin there that providing value, and obviously Melissa said the same thing, it's like providing value, customers will stick with brands on and off throughout their life. And banks and financial companies have the luxury of thinking about lifetime value, because of that's usually the relationship that we as institutions have with people, like grocery stores. It's like one day you go to Publix, and then the day you go to Kroger's, but you're going to go back to Publix. And you're seeing in the finance space that for 1 year, for whatever reason, they went to Discover for a loan, and then this year they went to Marcus, and they're moving around. And consumers are more empowered now than ever to not need to be loyal to brands. In banks, they are empowered, they're educated, even if we all know they need more education, but they have more tools at their disposal to do assessments and values. And we all understand that there is a level of cynicism that has developed since the '08 recession, perpetuated by a lot of public failures of several institutions that have caused consumers to be much more ready to distrust institutions like ours, to look for the next hill and jump ship at the first sign of trouble. And it's all about, one, I think the whole industry is doing damage control on the last 10 years and providing new experiences. And frankly, it's been great for consumers. Like Robinhood got away with trade fees like overnight. Overdraft fees are going to be gone soon. Same day ACH is going to be the norm. Virtual cards are going to be the norm. Checks, thank God, are going away. So like, we're moving to a setting where consumers are greatly benefiting, but the industry was almost forced into it. And now I think the industry, because of momentum, is continuing. So when it comes to ownership and brand loyalty, it's more about cultivating a brand of trust and awareness that at the end of the day, someone can point to you and your brand and say, this is a brand that understands me, believes in me, and when I need them, I can go there, but I don't always have to go there because I have 3 other brands that I also trust with. But there is also an undercurrent of working with the people affected by '08 or who witnessed it, who we are seeing in the market data that are not adopting credit products as much as other generations were. They have less credit cards, less bank accounts, and it's part of that cynicism that we all need to repair. And I know that we're doing a good job, and it's a time-based thing now. And I think one of the benefits of the last 18 months of digitalization is it's enabled people to rapidly adopt products and experiences that they might not have been open to before. And a lot of people, a lot of the institutions, and a lot of us on this call are rising up to that challenge. And to me, as a very consumer advocate person, I think that the next 10 years will be quite interesting in terms of what's on the horizon, like credit-esque like products, like buy now, pay later, but it's not credit, it's debit.
Yeah.
And businesses are effectively giving you like no interest loans. And like, you're going to see, regardless of what the interest rates are, you're going to see loan interest rates go down, down, down. You're going to see credit interest rates go down, down, down. And because it's consumers are demanding it. And how do we work with consumers to create healthy relationships for them and us that both sides get value? And it's going to cause a rethinking of how money works, how data works, and who consumers really are and what they frankly deserve. Because before they didn't have a choice.
Yeah.
And at the end of the day, all of us are benefiting from that. So that's great.
Yeah, and just to kind of wrap things up, I mean, I think that the title of this session about new competition and facing the new challenges and how to compete. I mean, I think it's really about how you perceive where we are in time. And I think, as I mentioned earlier, it's about new entrants. It's about changes that are taking place on the landscape. And it is about a change in terms of the nature of competition. I think in the past, competition was viewed as somewhat negative because competition implies that somehow there's something I'm going to lose or is at stake of being lost because of these new entrants. I think, Brian, you just pointed out very saliently that what these challengers have done has really encouraged us all to step up our game. And I think as we've talked about these different topics during the course of today's panel, I think what you've heard is the secret of success is really stepping up your game. It's about bringing more value. It's about looking at that relationship with the customer differently than what you've looked at it in the past. That being said, I believe we are at the end of our time. I'd like to thank Justin and Melissa and Brian for being a part of today's panel. I'd like to thank you who are listening to this discussion for being a part of today's panel. And with that being said, we're gonna close today's session. Thanks a lot, everyone.
Thank you so much.
Yeah.
A huge virtual round of applause for our panelists, and a special thank you to Tim for moderating. This has been an awesome conversation, and I know the audience really enjoyed it. For our audience, it's time for you to make your way to your next session. Along the way, make sure you accept your connection request and take some time to check out our amazing exhibits. Thanks so much, and we'll see you around.